Hi everyone, welcome to today's video. So in February of 2022, the Russia-Ukraine crisis got very serious. And over the next 4 months, the Indian markets corrected all the way from 17,600 to 15,100. So there was a fall of almost 15% over a course of 4 months. Now another crisis is brewing in Russia. In case you don't know much about it, there is a group called as the Wagner Group. It tried to overthrow the existing power of Mr. Vladimir Putin, who is the president of Russia. He fled somewhere and then the news came that, this coup attempt is now over. There was some back-end negotiations that happened and then suddenly everything seemed okay. But experts are now saying that, this is just the beginning of the end for Vladimir Putin and his power is now being questioned. It has been shown that people can challenge his authority, and for decades now, the Russia might be in a situation where there will be civil wars and a lot of negative things. So I'm not a warfare expert. I don't know what is going to happen in Russia. Neither am I going to comment on that aspect. But I'm going to explain about that if there is a complete blowout in Russia, what impact it might have on the Indian and the US stock market. Are there some stocks that you should avoid right now? And the answer is yes, there are certain stocks that you should avoid. There are certain stocks where the worry would be very less and these are at good levels. So that is the conversation, the economic side that I'm going to explain. So please stay tuned on this video. So let us study this topic in very simple points. The first simple point is that let's look at what happened in the Russia-Ukraine crisis, which started in February of 2022, and what was the impact on the stock market exactly, and are there some trends that we can sort of decipher. So this is what the chart looks like. The Russia-Ukraine crisis began like decades ago, but the recent blowout happened in February of 2022, and over the next 4 months you can clearly see that the markets corrected by roughly 15%. Now the interesting bit is this, right, and let me draw it out with a different color, that even before the Russia-Ukraine crisis, the market was in a downtrend. So you can see that the stock market correction had already began somewhere in October 2021, and this happened both in the Indian market and the US market. Why? Because there were like interest rate concerns, inflation concerns, vagera vagera. So that is the entire perspective that you need to understand, and you need to make a mental note that the Russia-Ukraine crisis did not cause the stock market fall. It just simply accelerated a downward falling market. The second critical aspect from the Russia-Ukraine crisis that you need to understand is that the impact on India, or direct impact on India from Russia, is very, very limited. Neither do we export too much to Russia, neither do we import too much from Russia. I will show you the economic data also in a little bit. But when it comes to Russia and Europe, there are strong ties, especially given the fact that many European countries are very cold. They require their energy from Russia and there are gas pipelines. So the impending war between Russia and Ukraine, when it blew out, then what ended up happening was that Europe faced an energy crisis. Over the next 1.5 years, since this situation has somewhat mellowed down, so to say, Europe or many European nations have procured alternate sources of energy. They have procured their energy needs from different countries, and meanwhile, they have paid the price in terms of higher energy cost. Okay, so the existing crisis in Russia, which is now blowing up, it is unlikely to create any major impact on Europe. Now, why am I talking about Europe? Because India has very strong ties with Europe. Europe is a major trading partner for India. So if Europe suffers, or the entire EU region suffers, especially the Western European countries, then India is going to hit very badly, right? Even in stock market terms. Third and final point is that when the Russia-Ukraine war happened, it was a slightly more problematic event because no one knew that this is going to just blow out of proportion very, very quickly. So that was somewhat more unexpected. The current crisis is somewhat expected, right? So that's my perspective. Again, I'm not a warfare expert, warfare strategist. I don't know much about Russia. Not commenting from that particular angle. Why am I saying it? Because today the market's open. I'm shooting this video on Monday. The stock market fall has not been massive, right? So from that perspective, it doesn't look like that this crisis is going to blow out, at least as of now. Now, of course, if situation deteriorates in Russia, which is expected that it would, then it's another story. So let's try to understand that. So now let's understand point 2, where we will speak about Russia's impact on India and the world and what type of economy Russia is. So here the first key point that you need to understand is that Russia is a very closed economy. The meaning of closed economy is कि यार वो खुद में ही trade करते रहते हैं. They do not neither export much, they don't either import much. So they are a very localized, self-sustaining type of an economy. You might have also read the news that Russia is aggregating a lot of gold. So they are trying to cut their dependence on US dollar also. So what they are trying to do, or the Russian economy is trying to do, is that they are trying to just go into that self-mode model and self-sustainable model. Is that good? Is that bad? There are pros and cons argument around it. It's a very interesting economic discussion. I'm happy to have it probably on some other video, but very quick snippet there would be that, see, there are pros and cons to being an open versus closed economy. The best part about being an open economy, for example, India opened up its economy after 1991 LPG reforms. Let me know in the comment what is the meaning of LPG. So that really boosted our economy. Why? Because from a closed group economy, we became a slightly more open economy. A lot of companies or a lot of countries started exporting their stuff to India. That opened and strengthened our economic ties to all across the globe. And generally, it is seen that whenever countries trade with each other, it's better for the overall growth of the economy. On the flip side, arguments could be made that, you know what, for example, Gandhiji stressed on the self-sustainable model. So from that perspective, why did we even open our economy? Videshiyon ko kyun aane diya, right? And all that stuff. So that's really a philosophical debate. I will not go there. I will just leave you with the viewpoint that there are pros and cons to it. Right now, Russia is a closed economy. Therefore, its impact on the world is also very limited. So here is the Russia export data. And if you check the last 20 years, so if you start checking from post 2008, since when Mr. Vladimir Putin became like very powerful, Russia has not really gone up in its total exports, right? And this is where you're looking at the total value of exports, right? So this is billions of dollars, right, which it has exported. It has somewhat flatlined. Now the interesting part is that, see, this does not include inflation, right? Inflation की वजह से ही there is like general price rise, so you know normal 5-6% CAGR growth should anyways would have happened, but it is not even happening. So basically, in a way, if you look at the real economic data, there has been a decline in exports from Russia, right? So this just state the facts that, you know what, Russia is very happy being like a very localized economy. उनको ना ज़्यादा export करना, ना ज़्यादा import करना. Now more specifically, what is the trading relationships of Russia with India? Let's just take a very quick look, both in terms of how much India exports to Russia and what type of items and how much of it does India import from Russia. So if you take a look at this particular graphic, you will clearly see that India exports by country. That where is India exporting to? So Russia does not feature in here, or it has a very small part here. So again, not a major export partner for India. What about imports? That which countries India imports majorly from? So there is China, there is UAE, there is US, Saudi Arabia. So again, India is somewhat isolated from Russia in terms of import also. Yes, very recently you might have heard the news that India has moved to that rupee settlement system and it is building some partnership with Russia. But it was like at the back end, it was stopped, right? So again, there is not going to be any impact on that. So with that perspective in mind, you might be thinking that, you know what, कुछ नहीं होने वाला रशियन वॉर से इंडिया में एंड वी शुड कंटिन्यू टू इन्वेस्ट. No, so there is like one key downside that I see, that FII money or foreign institutional investor money might slow down in India for a little bit, right? Why is that the case? Because they might want to get a better understanding of what is happening in Russia, and these FIIs would love to manage their risk. They are very risk averse people, so to say. They really manage their risk, and typically what happens is that under risky circumstances, the FIIs means that rich Americans, rich Europeans like Mr. Warren Buffett, etc., they would take a stock of the situation and they would say, you know what, risk has gone up, so let's not put our money in emerging economies. So India, unfortunately or fortunately, is an emerging economy. So FIIs might likely wait and watch. But here is another good news though, and there are two pieces of good news. One is that DIIs are flushed with funds. For example, recently a lot of retail investors started jumping back into the stock market. Now what are they going to do with it? So they have to invest. Maybe they can wait for a month, but they will still have to put in money. That's it. Now second key part is that even FIIs are sitting on massive cash. So this can be understood by understanding the concept of dry powder. So dry powder simply means that what is the amount of money large VC funds or PE funds, these would be PE funds, yes, so these are PE funds in trillions of dollars that they are sitting. So what you would notice is that between the year 2020 and 2021, this dry powder kind of stopped. ये बहुत ही rich लोग होते हैं, they are extremely rich people, they sit on a huge amount of money and they are the ones putting money everywhere. For example, you would have heard of Abu Dhabi Investment Authority. So that is the sovereign wealth fund of UAE. So they are the funds like who give money to like SoftBank founder, and SoftBank founder then gives it to like, you know, companies like Paytm, whatever, right? So this is where the story starts, right? So these people are sitting, these really large investors, they are sitting on a lot of cash even now, right? So $3.7 trillion. The worst that they can do is wait and watch for a few months, but after a bit, they will have no other option but to still put in the money or all this dry powder that they are sitting on. So then comes the natural question that, okay, finally all this, what does it lead to? What type of stocks we should buy? What type of stocks we should not buy? Any insights there? So basically, my perspective would be not to buy overvalued things. And one very easy way of figuring it out is that look at the last segments fall. So in 2022, when the Russia-Ukraine war was brought into the equation, then which type of sectors corrected the most? So these were banks, which corrected quite a lot. These were IT companies, which corrected quite a lot. So let me show that to you. And now let me talk about the valuations of these things as of now. So this is Nifty Bank. This corrected by roughly 18.5%. Nifty corrected by 15%. This corrected by 18.5%, right? So this got more discounted during that time. So if you do the same analysis for IT, again, Indian IT companies corrected quite aggressively. So let me open up that also. And here you can see that the Indian IT corrected by almost 31%, right? And honestly, it has been trading in that same exact range for almost like 1.5 years now, right? So from that perspective, definitely banking stocks and IT stocks are not overvalued by any standards. Third thing is very simple, right? These are AMC stocks. I have been speaking about it, that something like HDFC AMC, something like NAM India, something like CAMS, CDSL, all these are AMC or AMC related businesses. Now they have also corrected quite aggressively. Why? Because whenever there is like the anticipation is that the stock market is going to correct quite aggressively, AMC companies are going to get hit the most. So they were already hit in this zone quite aggressively. So even now they are somewhat discounted according to me. Now comes the natural question that what are the type of things we should avoid buying right now, and are there any sectors that are somewhat uncertain? Can you comment a little bit? Definitely. So I will name two sectors that according to me would do fairly badly from this point or are likely to do badly. One would be pharma, right? And now pharma is of various types. And why am I saying pharma? Because India exports a lot of pharmaceuticals to Russia. Second key thing, India exports a lot of pharma to Europe. India also exports a lot of pharma to UAE. India exports a lot of pharma to the US. Now the problem in pharma stocks right now, and please understand that there are different type of pharma companies. I will probably do a community post tomorrow. I'm not talking about all the stuff. For example, Dr. Lal Path Lab, I'm not speaking here. I'm not speaking about pharma companies that produce and their products get consumed locally in India. I'm not speaking about those. I'm speaking about export oriented pharma that depend quite heavily on European countries and generally tend in terms of exports. So you can see from this chart that India exports roughly $431 million worth of pharma products to Russia. So this is a very big jump compared to like the second segment, which is organic chemicals. इसमें भी कुछ pharma होगा एक तरीके से. So even here, the entire spent or entire export of pharma to Russia is substantially big. So a lot of companies are going to get hit here. That's part A. Part B is the valuation of pharma. That even now, many of the pharma companies are trading at high valuation. Now you'll say that can you give a specific example? See guys, I'm not trying to create any panic and I'm not speaking anything against this stock. I'm just using it as an example, right? Please do your own due diligence after this. So for example, consider something like Sun Pharma, right? So now it has given a lot of run up, right? It is trading above its 200-day moving average. And if you check that what is the product wise breakup in terms of areas where it exports to, so you can clearly see that US में इसका 31% business है, emerging markets almost 19%, Europe में it sells a lot of stuff. So please check how much is it exporting to Russia. I don't know, I haven't done that analysis. I have picked up Sun Pharma just to make a point that see, it's a pharma company, it is exporting a lot of stuff, major work happens outside India. These type of businesses could get potentially hit. Of course, I can be wrong. I'm not trying to drive the point home that I'm right? So I'm not trying to speak anything negative because some of you might be holding the stock, you might start panicking. So no, please don't take my word on it. I'm just using it as an example. Now, the second type of stocks that I would avoid right now are pure commodity stocks. I don't see any point in terms of buying commodity stocks as of now. In fact, I had already cut my position 1.5 years back. I had made the announcements also. I keep on making new announcements on member community tab. You can check it. So I would not be buying any commodity stocks. The reason is very simple, that commodity cycle has already been played out. Last year was a major commodity, last 1.5 years ago was a major commodity bull run. Now that thing is over. Now it will take time for commodity prices to go back up. So from that perspective, doesn't make much sense. Third and finally, I would somewhat wait and watch the interest rate situation. the interest rates are high, they are supposed to be cut. That will give a big boost to manufacturing. So at this juncture, I'm just pausing my buying when it comes to manufacturing oriented stocks. I had already aggregated a lot of mid caps, small caps. I still feel that they are reasonable buys, but I will monitor the situation for a couple of weeks and then I will make another call whether to invest more money in small cap, mid caps. Again, not trying to create any panic. If you have purchased your small and mid caps in a diversified format, you are completely okay. Pura ka pura index for mid caps and small caps is likely to do well. There is no problem. But individually, if you have picked small caps and mid caps stocks with heavy positions on it, then it could create a little bit of panic for you. So please somewhat reorient that portfolio, balance out your mid caps, small caps well. Do not take over exposure on individual small and mid caps which are manufacturing oriented. Now, why am I saying it? The reason is very simple. That see, the interest rates are going to get cut at one point in time. It might take another 6 months, 12 months, something like this, but interest rates are going to cut. That is the time when these small caps will rally like anything. आपको उससे पहले position you should definitely build or consider building some of the positions there. But up until that point is reached, that it is very clear that interest rate is going to cut. There are like hosts of problems that these small cap, mid cap companies will face. Now, if some of them have a lot of exposure to Russia, again, check this chart. Now, again, please check that we export a lot of machinery to Russia. So, a lot of manufacturing sector in India exports a lot of stuff to Russia. So, if some contracts were already there in play for small and mid cap companies, they might suffer a little bit. So, from that perspective, be wary about these three sectors. So, I will quickly recap that number one, there is no major reason to worry about the Russia situation, even if it gets worse. I hope that it does not. But from a stock market perspective, there is nothing major to worry because India's and US's exposure to Russia is very limited. Number two, our tech stocks, AMC stocks, bank stocks are already reasonably priced. पिछली बार जैसी situation should not happen that what had happened with Russia-Ukraine crisis, that all these AMC, banks, all these companies corrected quite a lot, IT companies. So this type of situation should not play out now because we are already at reasonable valuations, I would say. Third and finally, when it comes to sectors like commodity, small and mid caps, please be diversified, please hedge out your risk. Very, very important because we are waiting for credit to get easier. If the credit get easier, these stocks will rally. But beach mein still the problems are there. If you're overexposed to small and mid cap, they can go like anything, right? So please be very, very careful. I'll make an updated post tomorrow on YouTube member community regarding which small cap, mid cap you should be literally worried about a little bit. So please read that post carefully. Now, on that note, this video that I had done where I had explained the market viewpoint of 3 leading experts in India, please go and watch it. It's a very good video, macro video of what is happening in the Indian market and how these big investors are hedging their risk. Hedging your risk is an element that retail investors do not know much about. This is something that I teach on my stock market course also. I'll be adding 2 more videos on my course. You can avail a special discount which exists for a week. You can check the links in the description and comment box. Thank you so much for watching and I'll see you soon.